Good morning, traders. It is Wednesday, the 11th of May, 2016. It's 8:01 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. I want to remind everyone, just like it says here on the screen, tomorrow is our live open trading AMA. At noon Central, 1 Eastern. It should go for about an hour, hour and a half. We'll try to address as many questions as possible. Part of that registration form for the AMA, there's a link there for a form to submit your question. It's preferable that you submit your question. Questions will be taken until 11:30 Central, 12:30 Eastern. Okay. Overall, the overnight market is the Globex market's fairly mixed. The Asian session is slightly up on the Nikkei and Shanghai and down on the Hang Seng. The European markets are all down. Yesterday was a trend day. It was a somewhat of a classic trend day. Gap up, unable to close the gap, and then continue to explore higher with no value found. We'll look at that in a minute. As far as what's driving the markets overnight, there really isn't all that much. We had Disney earnings yesterday. We had the Bank of Thailand keeping its policy anchored. But overall, there isn't all that much driving this. As far as what we're looking for today, we're looking for crude oil at 9:30 Central, 10:30 Eastern. Crude oil inventory is expected to be 0. And then the distillates are expected to have a negative 1 million barrel deficit, and then the gasoline is negative 500,000. Again, that's at 9:30 Central, 10:30 Eastern. And then we're also going to get the monthly budget statement at 1 Central, 2 Eastern, expecting 107 on that. Other than that, there really isn't all that much on deck. We do have Nowotny, who also released a statement early this morning. ECB Speaker Nowotny is a hawk, speaks in Vienna at 11:30 Central, 12:30 Eastern, and ECB Speaker Weidemann in Frankfurt at 1:10 Central, 2:10 Eastern this afternoon. Nowotny's comment this morning was in regards to he basically reiterated the viewpoint that the global recovery is far too slow at this time, does not see any secular stagnation for high-income nations, and China is creating significant uncertainty. That's what was said. Let's switch gears here and look at what we're here for. A couple of interesting things yesterday. Let's start out by looking at what was expected. Here are the expectations. This is from yesterday's Trader Bite. As always, you can always go back and look at those whenever you want. The primary expectation yesterday was for somewhat of a response. I expected a response at least back to the prior day's double top, expecting that to show some support. And then from there, I was looking for it to push to 65.50, 69.50, and then to actually pull back and then chop around until the close. Did not expect it to push into the 77.50 weekly pivot up here, which is what it did. But overall, yesterday, the primary hypothesis was on point. And the primary hypothesis got fulfilled fairly quickly. The secondary hypothesis was the same, except that the secondary hypothesis looked for a deeper dip into Monday's range, which was a completely balanced day. But given, I would suggest you look at yesterday's video at about 6 minutes, 6.5 minutes in. Really important stuff there that sets up this trend day move that we had. The buildup of the high volume node over several days gave us the energy to push through like we did. Let's look at what happened. So If you watch these levels on the right here, these are the flex levels. These are levels that I post onto a server. And if you have Investor RT, then you can add this as an indicator. It's an RTX indicator. There's no cost to getting these levels. They're just basically, my goal with these levels is to standardize what everybody's looking at who's following. If you don't have IRT, you can go to linsoft.com/FD71 to get it. But if you look at what's going on with these levels and how the market trades these, I just want to walk you through. I'm not sure why this is a 1.25 range. I prefer Renko's. Just switching periodicities here in a minute for a second. Okay, here we go. So the levels you see are derived based on price action or volume. Generally, I use volume profiling to figure out what context is likely to play out. These levels have not changed since Sunday night, by the way. They're not something I put up yesterday. But if you look at the methodical test here of this this former key area. It's an old mid composite low volume node. It is also a composite point of control. I talked about that level pre-market tests, and then it moves where it moves to the another key area, the weekly single up here at 65.25, and the former breach value. So it walks up there and pulls right back to into the mid, pushes through to the open, and then finally pushes through. And the next area up we're looking for, let's switch the scale, the next area up we're looking for is this mid of the downswing, and I had talked about the fact that 65.50 was really key for the overnight session, expecting a reaction at 65.50, and there it is. The reason I'm walking you through this is not to say, hey, look at me, I did this right, or I'm perfect, or whatever. The reason I'm doing this is to show you this stuff in action. A lot of times you'll hear about fibs or pivots or whatever, moving averages, and you're being it's curated. You're being given the instances that worked versus the instances that don't. And what I'm saying here is these levels are the same regardless of periodicity. It doesn't matter if you're looking at a 60-minute and a 15-minute, a minute, or in my case, 2-tick Renko here. These levels have some meaning. The market has some memory. And this reaction here was talked about pre-market. A naked point of control, the prior breach, a single, a whole bunch of stuff going on there. So we expect a reaction. So your option as a trader is to stock to get short or to scale out ahead of it if you got into the long early on. I did not. The next area up is 69.75 as discussed. There it gets to 69.25, pulls back, gives us about a 4-point rotation down. Once it moves down low enough, and again, this is a complete setup here. We have the opening swing high, we have the mid of the session, we have VWAP, and we have this this key volume area below us, or volume-based area below us. This constitutes a setup here. This is the primary place where the long could be put on, and we expect a breach. There's a retest of the 69.75. We expect a breach. We expect that breach to have a fair amount of power. So if I open up this delta panel, you'll see that overall. Once it breaks through, this is where the delta goes positive again, right down here, and then you'd think, okay, this is done. This is great. We saw an instance of it, but overall, you'll see that these levels are in play most of the day. There's your second chance to hop on at the IB high and that key level at 69.75. The target would be 75.75. We missed the target by 3 ticks right here. 3 ticks. after the test, but I'm looking for a small pullback, a zipper. This is what a zipper is for those who haven't been following for long. That is a zipper. That is basically energy being built for the next move. We look for a zipper, and then we look for the break higher again. Look at that test of 75, 75 in case you missed it the first time. And then it pulls back to the zipper. Note where this pullback is going right here. This pullback is pulling right to this consolidation zone. This is pure price action as there is. And then we push through that level, and now we're targeting 2080.75. Look at that delta as we push into the high. Why is that delta spiking the way it did? Why is this delta spiking? The delta is spiking because we breached the weekly one time frame level right there. And so essentially what the market has been in, the ES has been in, is a one-time framing down market. So let's pull up the volume profile chart. Oh, this is the monthly. So recall from last week or so, I said the market's one-time framing up, meaning it's putting in higher lows on a weekly basis, one-time framing, one-time framing, one-time framing, one-time framing, one-time framing, and then the one-time framing level was breached. Guess what? This is 65.50. That's that red level on the chart that we just looked at. This is the low that got breached 2 weeks ago, and the one-time framing up ended. In other words, the trend up on a weekly basis ended. The trend then started on a weekly basis down. So we started one-time framing down. The trend, the latest pivot point for the one time frame is right there, 77.50. 77.50. So if you look at your flex levels again, or look at this chart, there it is, 77.50. It is this level right here. And when the market breaches that level, what do you get? You get a stop run because the intermediate time frame is using that as a trailing stop on a lot of systems, on a lot of trend following setups. So we've breached that, and now we are basically likely to go into neutral territory. We have gone from one time framing up. So this is one time framing up to one time framing down, and now we have breached the one time framing up, and the expectation is we're likely to just sit tight. Let's zoom in to this profile, this weekly profile here. It's very important. So on a week-to-week basis, we have pushed away from last week's high volume area. Hopefully you can see this yellow here. I'll switch it to a darker color real quick. So we have built this high volume area down below. Where did we build that high volume area? We built it around the 40, 50 area all the way up to 47. 47 was our key figure here for Monday. Remember, if you recall yesterday, 47 was really important to test. The market came down to 48 and took a bounce and took off. We have a gap now between Monday and Tuesday, and we have an elongated profile, as you can see here, with no real balance, or it was unable to find the sellers. It could not find the sellers. We ended up with a double top. We ended up with a double top on a 30-minute basis here. We ended up with a weak high, not only in price. You can see those two letters at the very top. We ended up not only with a double top in price, we ended up with a weak high in volume. So if we look at the volume overnight in yesterday's session on the close, this volume here was pretty heavy at the high. So what we have there is a weak high. The weak highs tend to not last, and that weak high is leaning against the upper HVN at 85.75 or 80.75. We're almost back to where the Fed announcement was made, which was the 81.5, the Fed announcement at the end of last month. So overall, today the expectation is that we are likely to sit in this sit in the range of yesterday in this. It's not really a value area. We're likely to sit in this range here and test down to 71.50 on the open. We're likely to take a break today. That's the general pattern after a big trend day. We tend to just sit back and balance for a while, and that's basically what it's done overnight. We still have this ugly high. We don't have any excess on the high. We have that big run up on the close. The run up on the close resulted in a balance zone. On the reopen, very light, but then the market on the Asian session has sat in the middle here, balancing right in the middle around the 74 quarter area. And then on the European session, it dropped and it's sitting right in the middle. So we're sitting in the middle of this balance zone here. The expectation today is for chop. We're opening in range. I don't want to say in value because trend days do not have value by definition. But overall, today is likely to be fairly choppy. The expectation this morning, I'm fiddling with a lot of charts when I speak on a higher time frame. The expectation this morning, we are trading right here against this point of control. We're still in balance. The expectation is to try to push up towards that that prior high, chop around, look, find the sellers, push to 71.50, drive this this overnight low, push that overnight low for the overnight stat to be fulfilled, and then for it to sit and rotate in this range here. I'm not expecting anything outstanding today. Generally, the market will rest the day after a trend, generally. That's the primary expectation. That's assuming a test higher early. If we get a test higher early, I'm going to target 71.50, 69.75, and I'm looking for 65.50 on the extended runner. But if we open in this area and test lower, it makes for a more interesting trade. If it tests lower towards 71.50 and starts to rotate up, I'm looking for it to bounce around, chop around in the afternoon, and potentially push that that weak high into the 80.75 area. That's hypo number 2 for today. Okay, I know I've covered a lot here today. There's a lot to cover, but overall, that's how things shape up after days like yesterday, where you have a big trend and a kind of a sequential push up and up and up and up. People tend to get themselves into a breakout mentality and come into the day after with a breakout mentality. It's important that today you just relax and let the market decide what it wants to do with yesterday's trend. It could not find sellers in a proper way yesterday. So ultimately, I would like to see Hypo 2 work out and for it to continue to push higher to find those sellers before it properly rotates down. We still have a gap below us. For those who have flex levels, you'll see the gap pop up. The gap area is back where we had it before from a month ago, exactly a month ago, the same gap zone. Good luck, and I'll catch you tomorrow. Take care.